Hello, this is Solomon Davis from Right Side Trading, where you can learn to trade on the right side with confidence. Today is January 24th, 2018, and this is my day trade review, where I'm reviewing my 5-minute trade, and I'm also reviewing a trade that I did later in the day that I normally wouldn't do. So that's the whole reason of me doing this. I do these recordings where I want to kind of review, why did you do that? Did it make sense? Get it all on record, because I did get into the trade a little bit late than what I normally would have wanted to got into this trade, so I want to take a look at it. Although the trade still was a good trade for me, and plus once I did realize what I was doing, I ended up making the position size a little bit smaller than what I normally would do in this particular account, and I ended up getting out of it, like I normally would do, because this is not the normal time of day that I do. So let's take a quick look at that. This is my Right Side Trader YouTube page. This is where I'll be posting this. First of all, let me let you know this is not a trade recommendation. Trading is risky. You can and you will lose money at trading. So get educated. That's what we're here all about, to help educate you on this whole trading thing. Check with your financial advisor, check with your significant other. See if trading is something that is actually suitable for you. Let me bring up the chart so you can see what I was seeing and see what's going on here in this market. First, let's take a quick look at the morning trade. Let's go to a 5-minute chart over here on the NQ. Like I say, I like using this almost as an indicator itself. This morning, boom, that's all we need to do is take a quick look at this. It was a doji, no trade, based on the rules. It's a no trade. So, but what happened was I saw this right here and I saw this here. So I was into this trade and I traded it up, of course, on my first trade this morning, it was about here to the 7,000 level, and that was enough on my QQQ to give me my money that I wanted to make on that particular trade. So I was in and out of that trade, and it's over your 10 points if you even got in late. I know I didn't get in that late on this particular trade this morning to 80 to 7,000, just below 7,000. It didn't break 7,000 this morning, but it was just below. It was enough to give you over 10 points. That's all we really want to look at there. But now let's look at this trade that I did this afternoon. Let's take a closer look at that. Let me take off these Fibonacci's. Fibonacci's have identified this area, as you can see. I'll redraw those later. And the other thing, let's take a quick look at, I just want to tell you that. The other thing was that helped me identify what was going on there. I showed you the Fibonacci's, and let me zoom in here. This market has been going up, all year long. So you have to look for demand levels. And this was a demand level that I had identified that I could see. I don't draw my lines in all the time, especially when it's a couple days back. You can almost say this area here, but where it kind of jumped out at, it kind of based and jumped out, it came down here. But this tail is way down here. So this tail came down to this area right here. So again, when the market rallied and based and rallied out of there, this creates what we call a demand level. It's not a support level, it's a demand level where buyers came in and pushed this market up. So when I saw the market come down to this area here, and let's look at that on a 5-minute chart now. Go down to a 5-minute. Zoom back in again. Boom. On a 5-minute chart, this is what it looks like. You add a Fibonacci. I left my Fibonacci's. I draw my Fibonacci's. I draw my Fibonacci's from the hour low to the hour high. Yeah, a target to the downside. Because this market, when I was drawing these, this market had already started dropping. And me, I kind of just walk away pretty much. When it hits a certain area, it gives me an alert. It came down here and gave me an alert. I saw this happening. I kind of passed on that because a lot of times it comes back up here and tests it like it did. It came back down here again. I kind of ignored that. And it came back up here again, and it ended up going lower. The indicators tell me things. But once it got down here to this level, it did this here. And I know based on what I've seen in the market and based on other things that I'm looking at, this is what we call, my trade this morning is what we call a L1 to H1 trade. It goes up. Let me, as we see the Fibonacci's gave me this point and gave me this point that was also at my L2 level. So let me take the Fibonacci's off right now, because they're in my way. Remove drawings. And now you can see my indicator, my custom indicator. Morning trade was a L1 to H1 trade that I do almost daily. Well, when they present themselves, but then I usually like to see it come all the way down here to an L2 level and see what's happening. Since it went below L2, we get where we call it a bubble trade. You know, when it goes bubble, we don't know how much. Usually, it's going to go lower. And when it came back up here and test this area, test, and couldn't break back above my L2 level, just like what it's doing right here, I expected to go lower. I didn't want to take a trade from here and all to back up here, because that wasn't enough room. I don't know if that was enough room for this trade. Because again, I'm not going to get in it right away. I get in here at what's that, 56.60, and then my exit here is at 70. That's only 15 cents. That's not 10 cents on my trade, unless I was expecting it to go higher, and I'm not expecting it to go higher at that time. That's just based on what I see in the market. So once the market came down here, based on that Fibonacci, based on that other demand level that I saw, yes, this was the time for me to take my trade. So I took my trade here at this point, expecting it to go back all the way back up here to this red level or this brown level. And if you remember, there was also a Fibonacci line here also that it could go back up to. So it gave me a couple levels that it could go back to give me the money that I want on my trade. And again, my entry down here is 67.80, and now a target of 68, almost 80, $1. So that's 50 cents almost. That's 90, say 90 cents on that trade. So making 40, if a 0.5 delta of that, you know, you can make half of that total dollar move. So that's 45 cents. Can I get 10 cents, 15 cents, 20 cents out of that? Yes, I believe I can. So that's why I ended up trying to execute my trade at that point, but I didn't. That was the other thing. I didn't execute the trade there. I kind of looked at it, thought about it, and I didn't really get into this trade until it was way up here. And at that point, you know, I still say, I'll take it, but I can't take it like I normally would take it. So I only did 10 contracts. And then I ended up doing another 10 contracts by accident. Now, we'll take a look at all that. And that's, again, why I don't try to, I'll tell you about it, and I can show you, I'll show you my trades. But it's too much things I need to be looking at and paying attention to when I'm trading. And it's kind of like why I'm not at that point where I trade. I'm gonna be trading live. I have trading rooms that one trading room that I'm actually involved with. Not involved with. I actually go to it to trade day trade stock. You know, because I do like day trading stock also, other than just these options. And those guys are actually really pretty good. Although I haven't been in that room probably in close to a year, but I still get their emails and stuff, and I look at what he's picking and stuff, and I look at it sometimes. I understand his methodology. So that was that. But now let's take a quick look at what I actually did. I'll let you see my account stuff, what I did just a few minutes ago. I'm not showing you the earlier one. Apply changes. This thing is actually being kind of slow, but I think you do see the screen. Like, this was my initial trade. It was at 136. If you look back at the time, yeah, that was really kind of late getting into that trade, because the price was probably about 20 cents lower, you know, and I hum around, and I saw that I still, you know, since it was a big range, I said, you still can get some money out of this trade, and I ended up trading this thing. And as you can see, it was executed at that 63. And then this was the accident trade that I actually got into, 10 more contracts when I was trying to sell really at 474. But I had a buy to open set and not a sell to open set. That's why I kind of really I need this platform here. I'm not as comfortable with it as I am with some other ones. All I can say, leave it at that. So I ended up buying at 66, and then I ended up getting out of all 20 at 78, 10 cents higher, 12 cents higher than this right here, about 15 cents higher than this right here. So I'm okay with it, but I did make, after looking back at it, I made a mistake here. I ended up getting in late here on my trade, you know, based on what and this is not the normal time of day that I trade. So that's why you have to practice this stuff. And it's good to practice it with real money and get where you have confidence in executing these trades based on where you see it. But I'm not one who trades usually this late in the day. So that's what caused my hesitation, but still based on what I was seeing in the market, I still knew I had room in this trade to actually make some money. But I traded it small, just in case it did go against me, because I would have been stopping myself out. Let's go back over to the chart. That's enough of that. If I were to stop myself out, I had to stop myself out down here below these lows here. If it came down here and ended up the way I do it, if it comes down below here and close below here, I'm out of this trade. And I didn't get in this trade until, like I say, probably way up here. What was the time stamp? Yeah, 36. So I didn't get into this trade until way up here. So, but I'm looking at this. That's at 68.35, 30, yeah, 68.35, 37. And I was looking for it to go all the way up here. I remember 90, 75, 80. So it was about 40 to 80, 20, giving me my 10 cents. That's why I only took 12 cents. So you gotta trade what you see and what you kind of expect the market to do, because then you know the money that you're going to make. And that gets back to our whole thing. This is Solomon from Right Side Trading, where you can learn to see it, know it, and expect it. And that's it. That's all I really want to share with you guys at this time. Again, thanks for viewing, and you have a great day trading and have a great week trading. Talk to you later. Bye.